Your bank statement usually shows where your money goes to die, but if you look closer, those same transactions are a shopping list for profitable businesses you could actually own. You can skip the brokers and the million-dollar down payments because the best acquisition targets are hiding in your daily spending. The wealthiest individuals on the planet build and sustain their wealth by purchasing existing, cash-flowing assets. If you look at the Forbes 100 list, you will find a consistent pattern of wealth creation through acquisitions. Today, we are building your own proprietary off-market deal pipeline. This four-step process, mine, build, outreach, and value, allows you to find businesses where you have zero buyer competition. Before we start, gather your tools. You'll need your Venmo app, a recent credit card statement, a blank spreadsheet, and a ChatGPT window open. Identifying as a potential acquirer rather than just a customer changes everything. It reveals a massive, untapped market of profitable operations right in your neighborhood. Step 1. Mine your expenses. Open your transaction history on Venmo, PayPal, or your credit card. We're looking for where your cash flows every single month. As you scan the list, ignore the large corporations, big box retailers, and digital subscriptions. We are looking for individual names and local vendors. Focus on unsexy, local service providers. Look for house cleaners, landscapers, property managers, and handymen. The primary qualification here is direct access. If you can call or text the owner right now, they belong on your list. By targeting these small, local operators, you avoid competing with private equity firms. These businesses are too small for institutional money to notice, which gives you a clear path to the owner. Step 2. Build the pipeline. Open that spreadsheet and create 5 columns: owner name, service, monthly spend, total revenue, and value add. Take 3 to 5 of the businesses you identified and populate those first 3 columns. You already have this data from your bank statement. The value add column is the most important. Here, you list obvious, fixable flaws in their operations. If a cleaner lacks a subscription model or a handyman has 0 Google reviews, you've found a way to increase the business's value on day 1. This pipeline works because you aren't looking for a perfect operation. You're looking for an imperfect reality that you can scale using simple, modern tools. Now the part most people avoid: direct outreach. It's normal to feel hesitant about asking a business owner about their finances. Use this exact low-pressure script. Hey, I'm looking to invest and help grow small businesses in our area. I don't know what kind of volume you do, but if it's a fit, I'd love to help you scale. Roughly how much revenue do you do in a year? Stick to the script. Do not ask for a meeting. Do not start negotiating. And do not overcomplicate the message. Success in this step is defined by a single outcome: getting one text back with their annual revenue number. Sending this message changes the power dynamic. You are positioning yourself as a potential business partner who understands their bottom line. Once that number comes in, we move to the final phase, the Keep It Stupid Simple, or KISS, valuation. Ask ChatGPT for the average profit margin of the industry you're looking at. For a cleaning business, the AI will likely point to a 20% margin. Multiply the revenue they texted by the margin. For example, $200,000 in revenue at 20% yields $40,000 in annual profit. Multiply that profit by a standard 2 or 3 multiple. Your estimated valuation is $80,000 to $120,000. Small service businesses trade at these lower multiples because they are fragmented and often owner-dependent. You are buying a reliable source of local cash flow. This back-of-the-napkin calculation allows you to instantly qualify a deal. You'll know if the numbers make sense before you ever walk into a formal meeting. You've just built a proprietary deal pipeline. These are targets you already know, and more importantly, targets that already trust you. If the valuation fits your budget, your next move is simple. Reply to that text and schedule a coffee to discuss a partnership. Deal sourcing is about volume and consistency. Run your daily expenses through this 4-step framework every single month to keep the pipeline full. Acquiring a business becomes possible once you have a systematic process to spot undervalued assets hiding in your own bank statement. Success comes from turning over the rocks everyone else is just walking past.